Welcome back to our show, your show, Let's Talk Stocks. In studio with us this morning is Mr. Ryan Landey, AVP Investment Management at Sygnus Credit Investments Limited. Of course, welcome to the show, Ryan. Absolutely happy to have you.
Thank you for having me.
All right, so Ryan, Sygnus just coming out of a significant year. You've made a lot of money this year.
Yes.
Talk to us about what contributed to that significant increase in profits. You made about what, US
5.13 million this year.
There you go. Big money.
Yes.
Talk to us. What happened?
I'm happy you asked that question. The major contributor to that growth is growth in our overall portfolio year over year, which is about 28.7%. Additionally, we repriced our assets at a much faster pace than our liabilities. As you currently know, we're in a high interest rate environment, and therefore we use that opportunity to increase the prices on our asset side. Additionally, we've complemented that with fees. As you'll see going forward, we'll increase the amount of fees income that we get on our overall portfolio.
But looking also at that, we saw that you were able to increase your private credit portfolio. You're now at about US 150.
Yes.
So you're doing a lot of major moves over there. Talk to us about that increase in that portfolio.
Yes. Well, the truth is, even though we're seeing about just above $150 million on our balance sheet, we're actually closer to 200 million when we include our Puerto Rican portfolio. And that is because of how we actually carry the Puerto Rico portfolio on our books. So yeah, that's how we have sought to build out that balance sheet.
As you talk about the Puerto Rican portfolio, talk to us about how you've integrated the Acrecent Financial into all of this, all of the operations that you're having over there, and how significant has that been for operations for 2023?
Okay, so we recently completed full integration of Acrecent into SCI, which was completed as at the end of this year. That integration led to increases in efficiencies, so increases in efficiencies in regards to tax, and we would have also cleaned up the asset side and the liability side. So now the Acrecent balance sheet that we have is purely private credit. And we expect to grow this as we go forward. And you'll see this as Acrecent is in the Puerto Rican market, which is a $500 billion economy. So we expect Acrecent to grow, at a much faster pace than other areas of the business.
Boy, it's almost unimaginable you're talking about growing at a faster pace, given what we've seen so far this year, and given that your revenues, your top line, has increased by about what, some 7% Are we talking about US 8.3 billion? That's a record for you this year.
Yes.
And you going better that?
Yes, we're looking to better our core revenues come next year. This year it was really underpinned, as I said before, growth in the underlying portfolio. So next year we expect a larger contribution from Acrecent, as we would have cleaned up that balance sheet, and now we're looking to advance the growth of Acrecent. So we expect a lot more income to
Acrecent to really be driving some new business in that portfolio.
Correct.
Talk to us a little bit about the share buyback program. I know that's something that you're thinking about, looking to implement a share buyback program over the next couple of years. And that would show some confidence in the company, wouldn't it?
Yes, it would. So the share buyback program was actually already implemented, and we started as at the end of the year. We purchased about 2.46 million shares, and the aim is not to control the share price. Our aim is really to deliver value to shareholders and from there spur investor confidence into the company. From the beginning, what we did, we envisioned creating value for our shareholders, and therefore, it sort of coincided with what we would have written in our articles to say that we're to start our share repurchase within the 5-year period. And therefore, seeing that the shares are at such deep discounts, executing at this time was, was perfect.
That's an excellent point. As we stray a little bit, so your massive discount to market, to book in terms of your share price, but that's generally the market. How do you feel about the operating in this market generally?
As we know, the market that we're currently operating, it's not a developed market as a US or so on. So it's normal, as we'll see. It's right across the stock exchange, but there are ways and means of spurring investor confidence. And once we put ourselves out there and let investors know that we're here to deliver value, we expect investors to come in, buy shares, and
Talking about spurring investor confidence, Acrecent,
yes,
no less, has actually reaffirmed your credit rating, which is a big thing for you. How has that been taken by the managers of the company, the different stakeholders? I mean, certainly it's a big statement to the market.
Correct. In fact, that's a very good question and very important to us. As you know, credit rating as a creditor, it drives confidence for our creditors, as it gives them an independent perspective or a bird's eye view of the operations of the company on both liability and the asset side, right? Furthermore, since inception, we would have communicated that before the 5th year, we would have gotten our credit rating, and we accomplished that, yes, within the 4th year. And in fact, this year is actually the 3rd year we've been rated, and we would have seen over that 2 years an increase in the actual credit rating by a notch. And we expect to further increase this going forward by many notches.
Okay.
Yes.
Excellent. All right. So you're operating in a market. Of course, you're looking to leverage about a US $1 billion credit market. Talk to us about some of the strategies that you'll be implementing to ensure that you're very successful in this market, that you continue to grow both top line, to grow your revenue book, your private equity. Talk to us about some of that.
So first off, we can't give away our strategies, right?
Can't give away the trade secret.
Exactly. But what I can say is we'll be looking to diversifying our base, our credit base, by partnering with international and regional institutions, right? And the key here is to have multiple types of financing solutions, multiple currencies, USD, Jamaican dollars, and of course, whenever we establish, special purpose our country-specific vehicles, we may choose to utilize the currency of that particular country. And what this helps to do is to, assist with matching, whether it be variable rate instruments with variable rate liabilities, so that both asset side and the liability side, they're both matched. And we expect to utilize this in providing more flexible capital for our investors, for our creditors over time. As you know, we're here to really drive growth in middle market companies, and the flexible capital, the flexibility allows us to offer more better financing solutions to those particular creditors. The truth is, even though we're seeing about just above $150 million on our balance sheet, we're actually closer to 200 million when we include our Puerto Rican portfolio. And that is because of how we actually carry the Puerto Rico portfolio on our books. So yeah, that's how we have sought to build out that balance sheet.